All right, yeah, Greenwood Stock Trading here with Alex. Just talking about the market. Yeah, I see it's making another. I think we're at 377, and I honestly thought once we got to like 378 this morning, I mean we were going to sell off pretty hard. But as we were talking about yesterday's days before, this is a really good reset because um, basically I wanted to be in puts this morning and I missed because we were looking at end of the day options, and we see we get a nice sell off from 376 all the way down to 368 today, and puts were way up. So I'll just talk about I'll talk about the direction of the market, predictions, and then we'll talk about some weeklies, and then I'll let you know the trade we made yesterday, which was my favorite setup, a rally into the high of the day, the last 30 minutes, and then a sell-off. So you see we went from 376 all the way down to 374, and as you can see, my puts that I bought for 10 cents ended up going into the 40s actually. So that was a little frustrating, but it happens. You know, it's better to have risk management than to not have risk management. So again, I'm just going to give my weekly direction. As you see, anytime you get red engulfing red or green engulfing green, it's a pretty strong indication that it's going to continue in that direction. But I mean, you can't be fooled in a bear market, because once we hit resistance or we hit places that we weren't able to go previously, then we normally get a pullback. So this is the first time in how long that we've had 3 green days in a row. So what normally happens is just like the previous day, we get the sell-off after retesting the highs, and it can be pretty violent. I remember getting in on the spike at the 376, and then immediately being up, like 100% after we got this pullback. And I actually think I got stopped out right around here. It spiked right before it sold off. So looking at the weekly, again, we're bearish, but always remember, in a bear market, you're going to have serious, huge rallies. So, I remember we were just here a couple weeks ago, Alex, and we were talking about this range, and just knowing that this trend line, that this range had to open up, and then all of a sudden the floodgates came out and the bottom fell out, and I wasn't ready. That's the day that's the day I got stopped out of my puts at 9 cents. And then they went to $4 the next day, on this day. Yeah. The SPY was around 405, and then they ended up, getting into the 380s the same day when the Fed, when the CPI data came out, which we predicted would be bad. So, it's not just about having a plan, it's about executing and really being mentally ready for the game plan that you set. So again, we got a green stick. At some point, this range has to open up. It's either gonna break out and we're gonna go back to 390. But what I believe is gonna happen, we're gonna go 360s and below. So either way, we've already tried to break above last week's high. Even last week's open hasn't even been pierced yet. So we're going to be looking most likely at 360s and below this week, and into next week maybe 350. So that's pretty much all I got. Again, just for the day, the setup is the same. All you got to do is look and see what's going on. Once you start green, normally with SPY, you stay green, especially in the market when it shoots up and it doesn't sell all the way back off. Then you can continue to think bullish until the end of the close, because a lot of people just don't want to be long after the close, and so that it just sells off. So I'm looking for similar action today. Once we break this 5 minutes, once we break this the 50 and the 20, I use the 5 minute a lot. Then we'll be a lot more bearish after that. But we actually hope it holds support and continues to kind of stay at a nice even level, because when it goes flat, that's when the hardest sell-offs come. When it stays flat, and then all of a sudden you'll see that big red bar when volume falls off. So it's pretty much it. Again, we're bearish, but again, remember, within bear markets, you're always going to have huge bull rallies. And then one more thing, you got to understand that they're burning puts right now. So you got 3.6 million puts to 2.4 million calls. They're going to try to burn as much money as they can, because these puts are just diminishing by the second, literally. So it's pretty much it. Have a game plan, stick to it, and yeah, Alex, what else you got to add to that? I don't know if you could share how you can share your screen, but go ahead.
See, give that a try. Yeah. See if you can see that.
Yeah, let me pop it out. All right, yeah, we're good to go. Hold on 1 second. Okay.
Pretty simple. Just set up a couple of supply and demand zones here, but I guess one of the major points that I'm watching here is pretty much you see like that these two candles, these two daily candles, the volume is significantly lower than the third one right here.
Right.
So usually when there's like a lot of result, but it really takes much volume to bring it down, you can kind of view that the same way as if we were going up. So a major point here that I've been watching is this supply area right here, which we did test kind of today, and it did fail.
Right.
So that is definitely some signs of bearishness. But in the case that it does break above that supply zone, I do believe that there will be definitely some movement upward, especially because of the effort here. There wasn't really much volume or activity going on in this area, so taking that thesis, I guess, and running with it, if we do break above the 613 high, then it'll be an effort to kind of recover this previous demand zone. Has a couple of support lines here that you can see, but yeah, definitely minimal effort. But if we do fail to break this today, or if we retest it tomorrow, that supply zone, and then we fail again, then definitely looking for some downside. But yeah, so as far as this chart goes, that's pretty much it. And I do have a count that I wanted to share.
Cool. Yeah. Yeah, I see it. I was gonna just make a quick comment. Whenever I sell, I call it the big red bar. It's really hard to get after a big sell off, a big downturn, a big red candle. It's really hard. A lot of times you'll see a test to get over that red candle, and it just can't, and then it fails, and then it makes a lower low. So you always want to when you're shorting, you always or buying puts, you always want to look at the last big red candle and hold your position until it gets over that and confirms. So you see, we tried. Are these dailies? Are these daily candles?
This is on the daily, yeah.
Okay, so you see the fourth candle, the last red candle we see. You see it try. You see we're trying to go there. We're failing right now. This is when you want to get into your short position again, or you want to set your stop over that. If it continues up, if the next candle is green and confirms, then you can close out, because then we're looking to maybe change the trend or get a higher bounce. But other than that, that's a strategy I use for some of my put exits. And as you can see, just looking back, it's really hard to get over those big red candles whenever you get a big sell off.
So you'd recommend putting the stop right here where I have the cursor?
Well, yeah. So the stop would be there. Now sometimes they'll spike it just like they try to spike it on the candle that you're hovering over, but then it just fails, and then we see another big red bar. So
yeah, absolutely.
You can scale out and take profits towards it, especially when it dips more towards the bottom, because obviously stocks just don't go straight down and straight up. So, but if you were buying puts, you would want to buy about now on these green days, because it's, especially when it's failing to break above the last red candle, it's a really good indicator and probability that we're going to retest those lows, especially if it can't break above the last red candle level. So it's really simple.
No, I was just going to add to what you were saying, dude. Especially so when these red candles, like specifically this one, has such a high amount of volume. So it just kind of adds to, I guess, the quote unquote heaviness to it. That's all I wanted to add, pretty much.
Right, and then you see the support and resistance level. You see the candle with the long wick previously. Yeah, you see that candle. So I mean, you see that support, and you see where the stock is having trouble getting back above, right along those levels. It's actually shaded lighter gray as well. So you can buy puts around those levels. But again, I mean, just the overall thesis is understand that you're going to have big rallies in bear markets with a failure to break above previous levels, and then a break, and then a break down to a lower low. So
yeah, continuation.
Yeah, so it's gonna spike down, it's gonna bounce, and it's gonna continue lower. You just want to have a game plan and be sure you catch that, because it's going to try to fake you out, because people are in there shorting, and they want to they want to blow out as many shorts as they can in order to collect that money, and then the market continues in the direction that it's been going. So that's pretty much all I got.
Absolutely. Let's see here. Anything? No, apart from the Bollinger Bands, I do have these set up a little bit wider than the normal setup. It does typically, if we are in downtrends, which we currently are, it tends to test the lower band and move towards more the middle, where it gives it kind of more space to move downwards. So yeah, for sure, if we can tell that this breaking above this level and breaking beyond this candle is definitely a difficulty, and it's showing so right now, then we can kind of use these bands as a guide for more downward pressure. You can kind of see it right here. Similar activity, comes down, tests the band, moves towards the middle, and then continue downwards. So yeah, we'll see what happens with that level, I guess, today. I mean, unless they break it after hours, that would definitely be interesting.
Yeah, so again, we're setting up right now for let me check my screen. We're setting up right now to, again, just kind of repeat. I mean, sometimes they try to keep it up without selling off too much, but it's setting up perfectly. There's a lot of downside. Remember, these levels get established with pre-market lows and pre-market highs. So the pre-market low today on SPY is 368. So we're 9 points above that. So it has a lot of downside to it, and the more they can hold it up before the bottom falls out, the better. So we just want to be in position, and once it breaks any kind of support, 5 minute, 2 minute, it's actually breaking down right now. Like I said, we just want to be in position. So that's pretty much it. I think we got like 10 seconds, and yeah, hope the video helps. All right, see you next time.